So welcome to this amazing revision session where we will revise Introduction to Ind AS and Schedule 3. Not Schedule 3, we will only revise Introduction to Ind AS in this lecture, okay? And we will also revise the key point of this revision is going to be, we are not only going to revise the concepts, but we will also revise the questions, okay? So without wasting any time, let's start the revision in 3, 2, 1 and go. First of all, the topic name was Introduction to Ind AS. In this, if you remember in class, before starting this topic, I told you some background about Ind AS. Like, Ind AS are IFRS converged. That means they are 95 to 97% same. There might be some differences which are known as carve-ins and carve-outs, right? IFRS includes two things, IAS and IFRS. The numbering of IAS is same like Ind AS. IAS 1 becomes Ind AS 1, IAS 2 becomes Ind AS 2. But IFRS 1 becomes Ind AS 101. IFRS has been issued in the series of 100. Got it, sir. Now, Ind AS is applicable to which all companies? We will study here. So the category of companies have been bifurcated into 4 parts. Companies, banks, NBFC, insurance companies. Ideally not 4, it should be 5 because even mutual funds are covered separately. Okay. So now we will discuss the applicability for a company. Okay. First, voluntary basis is applicable to the company. They can apply voluntarily from 1st April 15. Right. Now, if you wish to not opt for it voluntarily, you can choose mandatory basis, which starts from 1st April 16, which is phase 1, where the criteria is all listed, unlisted, having net worth greater than equal to 500 crores. Or if you are not applied Ind AS from here, you might fall under phase 2, which starts from 1st April 17, where all listed companies are covered, irrespective of your net worth. Or if you are unlisted company, if your net worth exceeds 250 crores, greater than equal to 250 crores, you will fall under phase 2. So now how do we remember these dates? I had already told you, just remember the sequence. It has a gap of 1 year. 15, 16, 17. 15 voluntary, 16, 17 mandatory. First will be phase 1, second will be phase 2. Phase 1, net worth criteria greater than equal to 500 crores. Phase 2, all listed companies, full stop. If you are listed, you will fall under phase 2. Second, if you are unlisted, the net worth, if it is greater than equal to 50 crores, you will fall under phase 2. Also remember, if you fall under phase 1 initially, Ind AS once applicable, always applicable. That means if you are falling under any of the criteria, you need not check the phase 2 criteria. Simple. Now, some important points to be discussed. First point, the calculation of net worth will be as per AS and not Ind AS, because as of now, the balance sheet available with us is as per AS only. Okay. Next point, the net worth which we should check, we should start checking from 31st March 14 and thereafter. That means if the net worth criteria of 500 is met in 14, 15 or 16, then you will fall under phase 1. If it is met thereafter, or the net worth is less than 500 and greater than equal to 250, then you will fall under phase 2. Okay, do remember. If you are applying Ind AS, apply it to your current year comparatives as well. Ind AS once applicable, always applicable. The next point is, if Ind AS is applicable to you, your parent, your direct parent, your direct subsidiary, your direct associate, your direct joint venture will also get covered under Ind AS. But fellow subsidiaries will not be covered. Do you remember the example which we discussed in the class? Let's say, for example, you are a parent company. You have 2 subsidiaries, AK and SK. And AK also has 1 subsidiary, X Limited. If Ind AS becomes applicable to AK, it will automatically become applicable to its parent, to its subsidiary, to its associate, to its joint venture. But fellow subsidiaries are not covered here. That means because of AK, SK will not fall under the purview of Ind AS, right? Okay. That means SK will continue to apply AS. But there was one more discussion which we just did, and that was if the parent is covered under Ind AS, the parent will have to prepare SFS and CFS both as per Ind AS. So even if SK is preparing its financials as per AS, for the purpose of CFS, SK will have to submit the data to parent as per Ind AS also. That means SK will have to do double work. He will have to prepare its own financial as per AS because Ind AS not applicable to SK. But for the purpose of parent to prepare CFS, it will has to furnish data to parent as per Ind AS as well. In such a case, SK will have one remedy also. Do you remember the remedy? SK can opt for Ind AS voluntarily. What will be the benefit of this? That means if they opt for Ind AS voluntarily, see, Ind AS is not applicable to SK, but if it opts for it voluntarily, that means SK can prepare its own financial as per Ind AS and can submit the same financial for the purpose of CFS as well. Right? We had discussed this example. Also, there is one question on this example as well. Okay. Next point. If your Ind AS applicable to standalone as well as CFS, already discussed. If your parent, subsidiary, associate, joint venture is a bank, insurance or NBFC, then directly don't apply Ind AS. For if your parent, subsidiary, joint venture, associate is a bank, insurance or NBFC, then you will check the respective dates. Let's say, for example, in this example, AK is a subsidiary, normal company, but BB Virtuals is a bank. In that case, you will not apply Ind AS to BB Virtual because of AK Limited. BB Virtual will check its own date for application of Ind AS. Simple, because the dates for banks, NBFC, insurance is different. Okay, let's proceed further. Companies listed on SME need not apply Ind AS because SME are small and medium enterprises exchange. Very small companies are there, so they need not apply Ind AS. Also, as discussed, comparatives shall also be given as per Ind AS. Also, if even after all the above criteria, you are not falling under the purview of Ind AS, you will still keep on applying AS. Simple. Right? These was for the companies. Now let's move on towards the other companies. If you are a banking company, the implementation is deferred until further notice. For insurance also, implementation has been deferred. What about NBFCs? Yeah, they have given mandatory adoption if you are meeting specified limit. So in case of NBFC or bank or insurance, there is no voluntary adoption. There can only be adoption if you are falling under the purview of Ind AS. For NBFC, there is again phase 1, phase 2. The criteria is same like companies. Under phase 1, listed, unlisted having net worth greater than or equal to 500 crores. Under phase 2, all listed NBFCs. Second, all unlisted NBFCs having net worth greater than or equal to 250 crores. Right? Now, how do we remember the date, sir? Do you remember? Just start with the first date. 1st April 15, then keep on moving in the sequence with a gap of 1 year. 15, 16, 17, 18, 19. 15 is voluntarily for company. 16, 17 is mandatory for company. Then as soon as the company's dates are over, start with NBFC. 18, 19 is for NBFC. Phase 1, phase 2. So criteria for phase 1 and phase 2 is same like companies. Simple. Okay. Again, net worth in case of NBFCs, we shall start checking from 31st March 16 and thereafter. Okay, voluntary adoption is not allowed in these 3 cases. Urban banks or rural banks need not apply Ind AS because those are very small banks. Also, if you are covered, your holding, subsidiary, joint venture, associate will also get covered. Also, comparative shall be given as per Ind AS. Simple. One more category of company was discussed, which was mutual funds. If you are a mutual fund, SEBI via a notification has also applied Ind AS to mutual funds from 1st April 23. Formats have also been given, but the formats are not under your syllabus. You just need to know this information that it is also applicable to the mutual funds. Last but not the least, the last point is the discussion of calculation of net worth. What will net worth include? Capital, reserves, premium, less any negative reserve, less deferred expenditure, less miscellaneous expenditure not written off. But few reserves which are to be ignored. Which one? Revaluation reserve, write back of depreciation, amalgamation reserve. These are reserves to be ignored. Don't consider this. Okay, sir. These were the concepts of introduction to Ind AS, but the special point of this revision is going to be we are also going to discuss some questions as well. So let's revise the question very quickly. I am just going to give an overview of the question. I am not going to discuss the question in detail because this is a revision. Okay, do remember. But yes, if you have studied it once, you will be able to recall everything. The first question was related to net worth. They are saying that they are a listed company. We have to calculate the net worth and tell them under which phase they are falling. So listed hai, but net worth is 505. That means the net worth is exceeding 500. Net worth is of 31st March 14. So they are falling under phase 1. The second point of this question was what if they are unlisted? Doesn't matter. Under phase 1, listed, unlisted, irrespective of that fact, if your net worth is more than 500, you will fall under phase 1. Start applying from 1st April 16. Just remember the sequence 15, 16, 17, 18, 19, right? So 15 was for voluntary, 16, 17 is mandatory. So phase 1 mandatory, 16. Okay. Okay. Next question again was for net worth. Net worth becomes 55. But since it is listed company, it will fall under phase 2. What if it was unlisted? Ind AS is not applicable in that case. Okay. Under illustration number 3, net worth was 600 on 31st March 14. They are falling under phase 1 in this case. And Ind AS once applicable, always applicable. So irrespective of the fact that further the net worth was reduced, doesn't matter. Once applicable, always applicable. Next point. Ind AS, net worth on 31st March 15 was 600. If the net worth on 14, 15 or 16 is more than 500, you will fall under phase 1, because phase 1 starts from 1st April 16, and before this date, if under any financial year net worth is more than 500 starting from 31st March 14, you will fall under phase 1. Okay. Illustration number 5, a very simple question where B Ind AS become applicable, so to its parent and to its subsidiary it will also become applicable. Illustration number 6, it was a very simple question where we discussed this question in the example also. You have 2 subsidiaries and this subsidiary has 1 subsidiary, 1 associate. Ind AS become applicable to E. So now what will be the applicability to other companies? So D will also be covered under Ind AS, and F and G, direct parent, direct subsidiary, associate will get covered. But the fellow ones has to be ignored, right? The fellow subsidiary will continue to follow AS. But do you remember, because Ind AS become applicable to parent, so for the purpose of CFS, these fellow subsidiaries will also have to furnish data as per Ind AS. That means this H and I will follow AS, but for the purpose of CFS, they will have to send data to company D as per Ind AS also. So in this case, do you remember a remedy was available where company H and I can adopt Ind AS voluntarily? Simple. Okay. Illustration number 7, where there was one foreign company which has 2 Indian subsidiaries. So for foreign companies, Ind AS is not applicable. Please ignore all the criteria for a foreign company. For Indian companies, check individually. X is meeting the criteria, Ind AS became applicable. For Y, it is not meeting the criteria, Ind AS will not be applicable. Last question, illustration number 8, a very good question, right? It says that there is a company Y which is a parent company and company X which is the normal company. Ind AS became applicable to normal company from 1st April 17. So normally what happens is, if it becomes applicable to you, it will also become applicable to your parent. But if your parent is a bank, insurance, NBFC, then you will have to check the respective dates. You will not apply to parent company because of subsidiary if your parent is a NBFC, bank, insurance company. So in this case, the parent was a NBFC. So for parent, we will have to check their respective dates and not apply because of subsidiary. So for subsidiary, it became applicable on 1st April 17. The subsidiary will start preparing financials as per Ind AS. For parent, it is mentioned in the question that the parent's net worth was 400 CR, right? So that means the parent is falling under phase 2. So parent falls under phase 2 and apply from 1st April 19. Sir, how come 1st April 19? Remember the dates now, 15, 16, 17, 18, 19. NBFC's phase 2 is from 1st April 19. So the parent will start falling from 1st April 19 phase 2 as per the respective dates. Now, there is some extra discussion also done here. Now, what is the discussion? Please listen carefully. The parent will apply Ind AS from 1st April 19. That means parent will start preparing SFS and CFS as per Ind AS from 1st April 19. But what about the previous 2 years, 17, 18, 18, 19? This CFS will be prepared as per AS only, na? Because during these years, Ind AS was not applicable to parent. So during these 2 years, parent will continue applying AS, right? Parent will continue applying AS. Because the parent applies AS in these 2 years, the CFS will be also as per AS. And for the purpose of CFS, we will have to ask X to send the data as per AS only. That means X will have double job to do during these 2 years. X will have to prepare its own financials as per Ind AS. That is fine. But for the purpose of CFS, during these 2 years, it will have to send data to the parent as per AS only, because till then the parent was not covered under Ind AS. Parent was preparing CFS as per AS. So it will ask the subsidiary to send the data as per AS only. Okay, so this was the revision of introduction to Ind AS. I hope this was helpful, and if you like the session, you can put a like button, do subscribe, and also there will be a Telegram link in the description box. You can join the Telegram channel. Okay, so thank you so much everyone. Bye bye everyone, take care, see you all. Bye bye, and keep revising, keep working hard. Bye bye.